On today's episode, we're covering how the MLI Select program is changing the rules again. And are the banks committing fraud for themselves, Patrick?
Well, maybe they are, but the good news is that we are getting more affordability, or are we? And even better news, Danielle Smith and Mr. Ford himself are actually communicating. Two provincial premiers are talking.
Now, of course, some bad news. People are leaving Canada in droves and construction jobs are on the decline. That's going to continue. We're going to dig into all this and much more on today's episode.
Let's rein it in. And don't forget, like, subscribe, comment, get those algorithms kicked up. Listen in, enjoy.
All right, ladies and gentlemen, welcome to episode number 68. Patrick, let's kick off and talk about this MLI Select program. I'm actually going through this right now on several deals. I got to say, dude, I'm so fed up with this MLI Select program and them changing the rules and making it more difficult and all the various BS that's around this. I'm just going to I'm going to cut ties with this. I think I'm just going to finance my stuff like traditionally, because it is just given me a hernia to deal with this MLI Select and this constant change. And it's so difficult. It's unbelievable. So what are your thoughts on this thing? I know for someone who's going through it, man, it's just bullshit, dude. I'm telling you.
Well, I keep talking to people that are going through it. And at the end of the day, to your point, it's sticky, it's costly, it slows things down. You can't make decisions because you don't know what's happening or not happening. And I think when you look into the future state, this is interesting because a lot of potential suppliers, future rental housing providers, are now kind of kicked to the sidelines and or having to refigure or reconfigure how they're going to get financing to keep their projects. So I think ultimately it's going to slow things down. I think the whole point of it, though, I think there's an agenda, and the agenda is that there's a lot of risk. OSFI has already again said to the banks that reserves are maybe not as robust as they need to be. And I think that, CMHC is kind of mitigating risk. So they're making it more difficult. You got to jump through more hoops, more paperwork. They're mitigating the risk that they're seeing in the market future state. So I think it's going to slow things down on the building side of it even further than it already is. And a lot of the small rental housing providers, smaller developers like yourself, I think it's going to maybe shut many of them down. Like you have the wherewithal and to kind of go for more conventional financing, but at the end of the day, that there's a lot of people that don't.
I think you're making a good point, Patrick. But I think in general, by the way, the financing landscape right now is by far the most difficult I've ever seen it. I know it's not just me saying this. I mean, I'm the guy with the rose-colored glasses. Remember, you've always said that. And recently, I had a client say to me, "Hey, JG, you're the most rose-colored glasses real estate investor I've ever met." And I took that as a compliment, of course, Patrick. But my point is that, man, even for me, I'm finding it so incredibly difficult right now. And the lenders are just making you jump through incredible hoops. And I got to say, MLI Select was like the one bright spot in the whole landscape where a lot of investors were like, listen, we can't get deals done anywhere else, but over here we can. And as a result, investors were gravitating towards it. And now they're shutting the door down. And man, this market, this is not what we need, Patrick. We need stability. We need to loosen up the lending requirements. We need to loosen up the financing requirements so we can get deals flowing. So this is exactly what we don't want right now. And as I talked about in the last episode, we're in such a negative doom loop right now where everything is tightening up. The appraisals then come in a little lighter, less deals move, and it's just negative on top of negative on top of negative. I'm going to become a doomer, gloomer, boomer soon, Patrick, if this shit keeps up. I'm going to tell you.
You're not old enough yet to be a boomer. But I think that the fundamental around all of this, though, JG, is that you look at it. So investor aside, let's just take the investor conversation, just set it off to the side a little bit. And when you think about, you operate a business, it's a small development business. You employ staff, you buy stuff, you're good for the economy. The bank, CMHC in this case, as the insurer, literally is making it difficult to do business. So you're trying to operate a business, again, investor part of the equation aside, you're trying to operate a business, and it's challenging to operate a business when you don't know what you can do and what you can't do when it comes to the financing side of the equation. That slows business down. I mean, think about the guys. Again, you've got the wherewithal and the savvy and the experience to do some different financing. You move things forward, but it's sticky, it's slow. And there are many people out there, many business guys that are business people who are trying to get things going, get stuff built, and they can't. So what does that lead to? That is all part of what is continuing to slow down the economy, given that real estate has been such a big part of our economy over the years. Now, some of that may be shifting. We could talk about Carney and pipelines and Ford and Danielle Smith, all those things. But ultimately, let's go back to what CMHC is doing in mitigating their risk. They're slowing things down a lot. So I don't know how this is going to roll out, other than you shut down small businesses and you cause that kind of grief. And that just continues to slow an economy that's already slowing. You slow it down more. I don't know. It's all a little messy.
Now, Patrick, I think I almost heard you there talk positively about Carney. So I want to dig into that in a second. I mean, I sensed it in your voice a little bit, so I want to dig into that for a second. But you're absolutely right, Patrick. And the last thing I want to mention to people listening to this is this too shall pass. And this is normal, Patrick. You and I talk about real estate cycles. This is what happens in this part of the real estate cycle. When it gets difficult and you're in this kind of negative doom loop that is reinforcing itself, which is, by the way, an indication that you're heading towards the end of the cycle. But what the problem is that this just keeps happening. Now, something's got to change and something will change, and this don't last forever. Patrick, you've seen this. How many times have you seen this over the years where this has happened, where financing got really, really tight, really, really difficult? And I know it might feel like it's more difficult today, but when you were going through it in those times, it felt like that for you then as well, didn't it?
Yeah, 100%. And I think that there's a strong argument for the fact that real estate in Canada needed a reset. And this is resetting the whole system again. Think about the developers in Toronto, Vancouver that aren't developing, the bankruptcies, the foreclosures, the power of sales, all of the things that are going on, given that for the past 15 years at least, real estate has been on a huge bull run with a couple of small glitches in between. And so many are arguing that this is what's needed to reset the system, to clean out all the clutter, to clean things up. Aside from those who think that, one of our comments at YouTube was, it'll go back to the 1930s. I'm going, what the hell are you talking about? I mean, that's the extreme part of those individuals that, look at the market the way they do. But this could be, and I think ultimately we will be very healthy, but it's a lot of pain that we have to go through before it gets cleaned up.
But you talked about a couple of things there, Patrick. First of all, I just want to shout out everyone and all their comments. I love all the comments. Actually, Patrick, you and I are going to do some kind of some comment discoveries, if you will. We'll do some videos talking about all the different comments. So that's coming soon. Please keep the comments coming. We love it, and it's great. Whether you agree with us, disagree with us, it's all good. Put it in there. I'd love to hear from you. But interestingly enough, Patrick, as you've gone through the years of difficult times and easy times and difficult times, this is just the cycle that real estate goes through. And we're going through that cycle again. And like you just said, this is when it cleans out the clutter, when we're in the bottom of this cycle, the way we are right now, when it's cleaning out all the clutter, this is where, that's why we keep saying, you and I, there's a lot of opportunities here. And some people are saying in the comments, we're just trying to pump up real estate. Guys, I'm not trying to pump up real estate. I'm doing real estate. So I'm not trying to pump you up to buy real estate. Like, I'm the one buying real estate right now. So I'm putting my money where my mouth is. But this is where we believe, and I'll just speak for myself, this is where I believe the opportunities live, because this stuff does go in cycle. It does go in waves, and you want to get in at the right point of the cycle. And from my perspective, Patrick, this is the time to get in. And is it more work? Oh, so much more work. Is it? I can't wait until it gets easier in a year, 2 years, 3 years. I can't wait because, man, it is heavy lifting right now, but the deals are awesome as well.
Well, let's expand on this a little bit, JG. And the reality of it is that, as much as we talk about real estate, it isn't just real estate that's infected. affected or infected.
Yeah,
Maybe
I'm
that
just
is
about to
right.
say that's like the best Freudian slip ever, right there.
It is. So we have to look at it, because when we talk about, we've talked ad nauseum about the meltdown of condo market in both Vancouver and Toronto. We'll talk about that in just a second. But think about it. Toronto, 42 condos were sold, I think, in June. So 42 condos in a population of 6 million. Like, think about that. 42. Out of control. Here's the thing about that. Similar in Vancouver, just a different scale. But the point is this, is you start to look at what the impact is on the economy. The economy is construction jobs. We talked about this 2 years ago. We started saying, this is what's going to happen. Here's the thing about looking into the future, is we don't necessarily know timing. That is always the issue. But we know that it's going to inevitably happen. We just don't know when. We started talking 2 years ago about the construction jobs that would be lost. And of course, what's happening right now is construction jobs are really being lost, particularly in British Columbia and Ontario. Nothing is coming out of the ground. Nothing is being built. And so when you have job losses, unemployment goes up, spending goes down, consumer confidence goes down, which when you have lower consumer confidence, people aren't spending, which again is a self-fulfilling prophecy. And then we slow down the whole economy. So it's this kind of chain domino effect of what's happening with our real estate market. And we haven't even talked about tariffs, JG. My gosh, what's going on.
I do want to talk about that. I'm going to come back to that in just a second, Patrick. I want to show a couple of charts because you're talking about it here, which is this. You can see the Toronto new home sales hits a record low, 345. The 10-year average is 2,750. So what's that, like 90% lower than the 10-year average? And by the way, that's the 10-year average, which means there's been many years, as you can see, we hit close to 5,000, somewhere between 4,000 and 5,000. So for 345, it's an incredibly low number. And if you look at Vancouver, it's not much better, as you pointed out over there, Patrick. I mean, it's really low right now.
Yeah, so look at the sales, but then look at the listings. So they're literally mirror images upside down of each other, right? So listings have spiked to record highs in both Ontario/Toronto and Vancouver. And by the way, both provinces listings have spiked to kind of in that record high territory, but buyers are still not coming out. Affordability, everybody's still waiting for affordability to happen, or interest rates to come down. The only exception to this is in Alberta, but even in Alberta, what are we seeing in Calgary? Again, I want to say we saw this coming. We've talked about this. Calgary right now is getting soft and softer. And so we're going to start hearing more headlines about what's going on in Calgary and the fact that a lot of out of province money moved into Calgary because they were going to be, the same geniuses they were in Toronto. So they're getting their asses handed to them now in Calgary. That's just starting. We're going to hear a lot more about that in the future as well. So all to say this is that real estate doesn't live in a bubble. There's a lot of things that get impacted by that, not the least of which is jobs. So let's add one other impact of this. So JG, think about this. You've got developers not building, no new projects coming out of the ground anywhere in Vancouver or Toronto. If you see a crane, it's because that project was started 5 years ago. So let's think, or 3 years ago, whatever it was. So think about this. No new projects, which means no new permit revenues, no new zoning revenues, no new tax revenues. All of the 33% of a project that was government taxes, permits, zoning, bureaucracy. Okay, all of those, none of that money's coming into those anymore. It's shutting it down. So, now you had thousands of bureaucrats sitting around shuffling paper around on all these projects, collecting checks from the developers. What are they going to be doing now? So do you think there might be some layoffs in that department? And do you think, by the way, that when the municipalities/cities aren't getting cities, one of the two, but the point is that when that revenue is not coming in, there's only one answer, one solution to fund the beast: taxes, property tax.
Now, let's come back to something you just talked about a while ago. You talked about tariffs And I think it's on July 20th or 21st. There's some deadline coming up for Canada and the US to work out a deal, so on and so forth. Who knows what's going to happen there? My question is the following, Patrick, is we need something to stabilize the market. We need something that people are going to look forward to provide us some stability to this market so that we can get beyond. And people are thinking it's interest rates. I heard this yesterday from a client saying, listen, when interest rates drop, I think we're going to see better action. I just had a friend of mine, first time home buyer, purchase a property, and I think he got a mortgage for 3.8% or 3.89%. That's a very normal rate, Patrick. Like, there's nothing wrong with that. If people think that the rates are going back to 2%, 1.75 and 1.8, like, forget it. Like, any time back in the day, when I say back in the day, I just, like, let's say pre-COVID, that you can get a mortgage for 3.8%. That's a very normal rate. 3.5, 3.8, 3.7, 4.0, 4.2. Those are just normal mortgage rates, and there's nothing wrong with those mortgage rates. So it's, in my view, Patrick, it's not interest rates. I think the interest rates are where they need to be, and I do think they'll come back down. Well, I hope they come back down a little bit more, but I think they're not, far out of reach. So what is it going to be, in your view, that is going to stabilize the market and give it the foundation it needs to start picking back up? What's that thing?
I don't think there is a thing. I mean, let's face it, we went through years of our federal government doing what our federal government's doing. There is some optimism around Carney. And at the end of the day, JG, we've said it, like, again, to nauseum. Our economy was driven by real estate and consumerism. Immigrants coming into this country, buying stuff, buying houses, us, as investors. I mean, the whole economy was low interest rates, big debt, consumerism.
Are you trying to say, Patrick, the whole economy is one big Ponzi scheme? Is that what you're trying to say?
It is. It actually is in a lot of ways. And now add to the fact that, so when you think about real estate shutting down, consumers, lots of layoffs, lots of uncertainty, they're not spending money, then again, that slows the economy down. Then you got the tariff scare, which keeps businesses kind of with their foot on the brake, at least touching the brake pedal, not the gas pedal. So we see this big slowdown happening, and I think it's going to slow down more. It's going to get far worse before it gets better. And in the meantime, the banks being slow, I don't know. What do you think about interest rates? I think that the variable, I don't think they're going to lower rates until late 2025. I think there's still more to work through the system.
Well, I can speak on that right now. I've literally renewed, like, I don't know, I'm renewing 1 or 2 mortgages every week right now. It's not my favorite part of the deal, I'll tell you that. But it's just nonstop renewals every week right now. And I've been going back and forth with my mortgage team, and they're saying, like, in many ways, depending on your plan with that property and your outlook and your timeline on that property, a lot of them, we're locking them in for 3 to 5 years because there's a view out there that rates go up, not down anymore in that period of time. So there's a view that we're kind of at the bottom of the rate cycle right now.
I think we are, and because I do pay attention to what's going on with, when you think about Israel, Iran, the US, the UN, Russia, Ukraine, none of the mainstream, but if you get into the kind of the depths of those individuals who are really paying attention to that, right now, it all seems quite quiet on the Western Front, but it's not. Russia and Ukraine are ramping it up beyond what they were before. That means, and Iran is being more pulled into this. Here's the point of this, JG. We've talked about this, and my oil prediction has been totally wrong, but it's not that it's wrong, it's the timing. I cannot believe how far they can kick these cans down the road, but that's all good. But I'm saying is that I think we're going to see bond yields spike. I think we're going to start to see them come up. I think that war is going to continue to escalate and get uglier. And what's happening is that East versus West, BRICS is getting out of U.S. treasuries. They're selling them off, so they're getting out of U.S. dollars. So this is all happening. So when you look at a window of 2 to 5 years, I think it's going to get really messy. And U.S. has got to get money happening. I think you're going to see bond yields spike, and that's kind of my forecast for it. I don't know when that's going to happen. That's always the issue, but that's what right now it's kind of all quiet through the summer so far. It's been pretty quiet. We're not hearing a lot about it, but if you dig a little deeper, and it doesn't take much to find those guys who are really paying attention. They're in Russia, they're in Ukraine, they're in Iran. Stuff's coming out. They're actually showing what's really going on. And it's not a pretty sight, that's for darn sure. So I think we are going to be at the effect of that. So to your point, right now what's happening is many, and when you look at the stats of mortgages being renewed, most of them, by the way, are taking 3-year fixed.
Yeah, and that's, it's funny. That's exactly, like, I'm either taking opens where I can clear them out quickly. I'm sticking to some variables because then you only got a 3-month interest penalty, so I can clear out those mortgages. Or I'm locking them in for 3 years. And in one particular case, I locked it in for 5 years because I'm like, you know what, that's a pretty good rate. And the lender was was not a B lender, but not an A lender, like kind of like a B premium lender, if you will, somewhere in between. And I was like, yeah, that's a pretty good rate. And it was a big mortgage. So I was like, you know what, I feel comfortable with that. Let's just lock it in. So we locked it in for 5 years. So yeah, definitely. If you would have asked me like at the beginning of this year, did I think I'd be locking in 3 and 5 years? I would say no, I don't think so. But that's how fast stuff changes. And Patrick, I think you said something brilliant there, which is, I do expect, and I've said this before, and you and I have talked about it, like, I expect a lot of fluctuations. I just think this is how the market's going to be for the next 5 to 8 years. And I have my reasons for it. And, we're not going to dig into that necessarily today. But I think that as we go through this new transition into the fourth turning, I think you're going to get a ton of market fluctuations where you're going to have these ups, these downs, and the concept of stability is going to be challenged in a big, big way. And people are going to you're going to have to get comfortable being uncomfortable if you're going to be an investor.
100%. And by the way, you were talking about the fourth turning. So for my birthday, I received Ray Dalio's new book. I literally had just read the introduction, but I'm a big fan of Ray Dalio, who's totally calling for, and he's studied it, it's normal cycle, normal, whatever normal is. But he's saying is that the devaluation, decoupling of the US dollar as a reserve currency is an inevitability. He once again is saying we don't know the timing of that, but he's looking at the debt cycle. And what we have to understand is that we are at the effect of a global debt cycle. This isn't just a US, Canada, Britain or whatever. This is a global debt cycle that is going to implode. It's going to come apart at the seams. So to think that Canada is not going to be at the effect of that would be naive. And so the whole point of that is you got to pay attention to this stuff so you can make good decisions. It doesn't mean you shut down. You can't curl up in a fetal position and wait for shit to happen. You've got to start making decisions.
You got to keep moving. But I will expand on that, Patrick, for those that are listening and kind of are thinking, well, I've never heard of this before. You got to read Ray Dalio's books, every single one of them. You have to read The Price of Tomorrow by Jeff Booth, and you have to read The Fourth Turning by Neil Howe. And I think if you read those 3 books and you kind of connect those dots, Patrick, to me, I remember when I read those 3 books, and there's another book called Rethink that I'm a big fan of as well by Tony Seba. And if you combine those 4 readings kind of together and you connect those dots, I know it really settled me down when I did this research, like right after COVID. I was kind of like, oh, I see where it's going now. And I became comfortable in the uncomfortableness of it all. And it allowed me to operate a lot better. Otherwise, I certainly wouldn't be making the moves that I'm making today. I would be a lot more fearful. And I think you can eliminate some of that fear if you do your research.
Well, I think, so back to what we've talked about so often and the way we operate. I mean, we're looking in as real estate investors, as business people, owners, and just, looking at the financial futures we're trying to create. You have to be able to look 3-4 years ahead and then start to your point, connect the dots, connect those dots and paint the picture that you see and base it on it, and then be open to change and always readjusting and all the rest of it. But when you're looking at the future, you can't look at tomorrow or 3 months or 6 months down the road. You have to be able to say, how is this going to look in 3 and 5 years from now? And that's where, that's why we spend so much time having these conversations. When we look at unemployment, that unemployment's going to get raised. The economy is going to increase. That is almost a given. I don't ever say guarantee anything, but it's like that's a given. We're going to see higher unemployment given the meltdown in the real estate world in our two largest provinces, and that's going to have an impact on the economy. That's just the way it is. And thinking about all of that, and you're going to see job losses across several sectors. I would like to see some job losses within the public sector, but that's just me.
Now, before we move on, Patrick, I just want to, for anyone listening, I'd love to get your thoughts. If you've read any of those books I talked about, put it in the comments below. I'd love to get your thoughts on how you're seeing things as well. Put it in there because, like I said, Patrick and I want to pick some comments out and give some shout outs to the comments and stuff. So please do that below. We'd love to. We'd really appreciate that. Now, Patrick, did a few minutes ago, though, and I probably have to rewind, I have to rewind the show maybe 12 minutes. But I think you gave Mark Carney a bit of you spoke about him in a positive light, and I didn't even know that was possible for you. So tell me more about that. What's going on there?
Well, I mean, if he follows through with what he's talking about, I mean, oil and gas, that's, we as a country need exports, oil and gas being the primary, world. And he's actually talking about pipelines if he follows through with what he's saying. And keep in mind, I mean, it's not like there was a big, the bar wasn't set very high with Trudeau. So, Carney doesn't have to do much more to make the Liberals stand out as, all-stars. But my point is that he's saying the right things. We'll see if he follows through. I don't agree with all of his stuff, but I don't care what politician you've got. You're not always going to agree with all of the decisions that they make. But having said that, Carney is at least saying some of the right things. I think, when I look at the negotiations on tariffs, I think he's a shitty negotiator, but we'll see how that all manifests and how that rolls out. But Carney's talking and doing talking about at least doing some things that are going to be very beneficial. And we have to start exporting our commodities. We have to start selling, and we're not, although we're talking pipelines at least.
Yeah, well, let's extend that conversation to the recent Doug Ford, Danielle Smith deal. They both signed mutual MOUs, memorandums of understandings, that they might be getting on the same page, Patrick. And there's kind of some headlines to this, which I love to see. Whether we work out a tariff deal or not, this just makes sense. I mean, why don't we trade more with each other? And it makes zero sense to me, and it never did, that it's easier for me to buy a bottle of wine that is made in California or that is bottled in France than it is to buy something from your great province of BC. I can't even get wine from BC here in Ontario. It's ridiculous.
And do you know, and very few people know this, but it's what it is, that if you drive to Alberta and pick up a couple of cases of wine, or to BC and say, oh, this is great wine, legally, when you go into Ontario with that wine, you're kind of breaking the wine laws. You're not allowed to transport that into Ontario. And I mean, it's not something that's enforced, but it is enforceable. And so, which is so ridiculous. It makes me crazy that when we look at what's happening economically and we look at the diversity of our provinces and what each of our provinces are known for and what we bring to the table as a particular province, and that we can't have totally open free trade across all of our provinces. It's a little, I don't know, maybe I'm missing something, but to me it just seems ridiculous.
Well, there's some highlights to this that I think is going to be very, very good. I love to see it. I think it makes a whole lot of sense. And listen, the details are still a little light right now, but the fact that we're talking in the right, we're heading in the right direction, I'm enthused about that. But there's talk about, Doug Ford selling a lot more Ontario steel to Alberta, which is fantastic. Ontario vehicles being sold to Alberta. Obviously, Ontario buying a lot more energy. There's a rail deal that's being considered. I don't know if there's a pipeline deal, Patrick. Probably. Is there a pipeline component to this deal as well? I know that Ontario wants more.
No, the pipeline deal is the bigger deal of all of it.
Oh, amazing.
Yeah, but I don't trust Ford. I don't know if he's conservative. Is he liberal? He kind of is a chameleon politician. So I don't trust.
Aren't they all? Come on, they're all like that. They're all like that. They're all 100% full of shit at the same time as 100% committed to their people. It all depends on what day of the week it is and who they're talking to. They're all like that.
It's true. And no accountability, no results. We have no way of holding our government accountable anymore. And not that maybe we ever did, but there has definitely been a shift. So all to say, we'll see what we see. They talk, there's headlines, they get sound bites on, whatever media, but we'll see.
We'll see. But at least they're positive sound bites, Patrick. At least they're positive sound bites. Now let's leave the land of positive sound bites and let's go to the land of negative sound bites, because it looks like Ontario, and Ontario is at the height of it, but there's a lot of Canadians that are leaving, and leaving for good, Patrick. In fact, this has spiked. If you look at these charts here, Ontario and BC are the two provinces where most Canadians are leaving. Obviously, the two biggest provinces as well, so that's not surprising by size. Also happen to be the most two expensive provinces to live in. I wonder if that's a correlation, but definitely the trend is, and if you look at the stats, I mean, it's right there. I mean, the trend is people leaving more than ever before, Patrick.
But, we don't know the breakdown, and there's lots of reasons that people are wanting to leave Canada. And, there's a strong argument for the way and the direction this country is going. Affordability aside, you look at the politics, the policies that are being put in place, the stuff that is not even being talked about in bills being passed that weren't even put on the table for the public to see, and the impact of that. So there's a lot of different scenarios where people are going, no, we're headed towards socialism. Some would argue we're already there.
Yeah, I was going to say we've been there for a while, man. I mean,
but people like it. People like, something. There's a lot of appeal to that whole socialism, communism argument, and there's a lot of people that are really buying into that. Look at Edmonton, for example. NDP, boom, they're in. Like that city's solid orange. So you look outside the province into the rural areas, and it's not. So I'm just using an example. Look at what's happening here in British Columbia. NDP, EB is an absolute shit show. He's a fool. It drives everybody crazy, yet he's the premier of this province, and he's putting in policies that make no sense, but nobody's pushing back, apparently. I don't know. It's all a little bit crazy. The point is that people are having and finding lots of reasons to leave. They're going not only to the US, they're actually going to, I'm going to use Costa Rica as one place, Mexico as another place. There is people that are going, no, I'm done with this government, and it's not even the cost of living. As a matter of fact, they can afford to live here, they just refuse to anymore.
Well, Patrick, you and I know a lot of people, real estate investors, that sold everything during COVID, post-COVID, in order to take their profits, if you will, and leave the country altogether. Costa Rica, as you talk about. Now, I don't know if, I haven't followed up with those people, so I'm not sure if they today think it's a good move, quite frankly. Have you? Like, I don't know. I got a couple people come to mind, and I know you and I know them. So have you followed up with them? Like, was it a good move? Are they happy with that?
Yeah, I've been in contact with a few of them, and Tulum, believe it or not, is a really popular destination. And younger, as in, under 40 or 35 and younger, but they're loving it. They're going to, Mexico. Lots in Costa Rica, happy to be in Costa Rica. So those are a couple of examples. But I think a lot of the leaving the country, I think we don't know the numbers, but I think there's a lot of immigrants and refugees came to Canada, got settled, then this is not what I signed up for, and are in fact going home. That's what I think is happening, but I don't know that.
I'll tell you my experience has been, as at Visture, we deal with thousands of clients every single month, not only tenants, but owners and clients on the construction side of the business, and so on and so forth. And I got to say, the most vocal, outspoken people about the government and their mismanagement of all things and policies are actually immigrants, but specifically not immigrants that just got here, immigrants that came here 20 years ago, worked their tail off to get to where they are, invested in real estate, and now are saying, like, listen, these policies are just asinine. This is not why I came to Canada, and I'm not interested in staying anymore. I'm seeing a lot of that's what I'm hearing, feet on the street. And it's interesting. So you're right, Patrick. It is immigrants, but it's not people that just got here like last year or 2 years ago or 3 years ago. People that have been here for 20, 30, 40 years who really worked their tail off to get to where they are. And now they're saying, like, listen, this is just crazy. These handouts are going to crush this country. I've seen this before. That's what I left. I'm not interested in going back there. I'm exiting prematurely. It's been fascinating every time I get that, and I've had this like in-depth conversation with some of these clients, and it's just fascinating because they have this world view and this world experience that I don't necessarily have. So it's an interesting perspective, that's for sure.
Well, we had just an example, and there's others, but I'll give you my own personal. We had a cleaning lady. She's with us for many years. Her and her husband and their kids from Poland. They've been in Canada a long time, but what was interesting is they went back to Poland. They literally had been there for years and years and years, done very well in Canada, didn't want to leave Canada. But when they see and look at what's happening, they're very clear. What's happening in Canada is exactly why we left Poland. And in other words, you see that the whole propensity of living in a communistic country, and they're going, no, that's why we left Poland. And now we're here and we see what's coming. That's how they look at it. That literally is what she said. We know what's coming. You guys don't know. We've been through it. We may as well go home.
That's interesting, right? So, I mean, time will tell. That's all I got to say is time will tell. But I've had this very experience, and lots of various. I've had immigrants from, South Asia have this experience. I've had immigrants from Europe have this experience. Like you said, they're just very, very fascinating. So it's an interesting conversation to have for sure. Time will tell, and we'll see. I don't know about you, Patrick. I'm not going anywhere anytime soon. So you may pack it up and go, though. I don't know. I'm staying.
Well, yeah. Well, I'm a senior. I'm literally a really serious senior citizen now. So I have to decide, what's next for me as a senior.
Serious senior. I like that. That's funny. Now, Patrick, just to one thing I do want to acknowledge is your recent birthday, and I think everybody should put comments in there wishing Patrick a happy birthday. I'm the worst friend. I didn't call on his birthday, but I think if we can maybe get like 1,000 comments, maybe it'll make up for it, Patrick. Like my voice through 1,000 different people, maybe. What do you think?
Yeah, there you go. Older, wiser, a little wider. That's the thing. I do notice though that I feel a little wiser. There's no doubt that this many years under my belt, I go, okay, there's some things I know for sure.
So you're becoming like we call Mike, at Vischer, Mike, we call him the old bull, eh? Like we need some old bull, when we need some old bull wisdom, we go to Mike, right? All the management team and stuff like that. So you're becoming the old bull now. Mike's got a couple years on you. Mike's 72, I think now. Yeah, 72 this year. So, you've got a couple years on you, but you're becoming the old bull. Is that what you're saying?
I'm looking at you. It's exciting. No, it's great. No, it's not. No, listen, at the end of the day, getting older is great. I'm just glad that I'm getting older. I'm here to get older. My mind is really young, but my body's.
Oh, you're the best shaped 67-year-old that I know. That's for sure. Now, last topic of conversation, Patrick, I think before we wrap this up is affordability, and this is an interesting take on an interesting headline. It's interesting that the news cycle is starting to talk about affordability. And you and I have been saying this for some time. It's like people are yelling stuff is too expensive, but in fact, and we understand, but prices have come down quite a bit and it has made stuff more affordable. And now we got some new stats coming out on affordability.
Well, it's more affordable, but I mean, they're coming off peaks. So in other words, if we keep comparing to the highs, so 2022, they're coming down. Some regions, by the way, have dropped to 2017, 2018 levels. Some have done that. I think again, when we look at condo market in Canada overall, that's going to continue to come off the rails. But there's something that we can't step over, and that is the lack of building. And so whether it's condos, single family, detached, any detached, it's not being built. So in other words, we're at record lows of what's being built. And we can talk to ultimately the unemployment that's going to go along with that and all of those kinds of things. But again, when we look into the future, look 3, 5, 7 years down the road, and as investors, that's what we have to do. There will again go through the cycle and there will be a shortage and the demand will spike and we will see prices escalate again. So this is part of the cycle that we're going to go through. And, as we've said many times, inflation is, we look at inflation, and we don't even talk about taxation, but I mean, a big part of our cost of living is the taxes that we pay. Those continue to rise. So my point of all of that is that we need to continue to invest in stores of value, in hard assets, real estate being one of those. We're seeing the devaluation of the dollar. So is it inflation, or is our dollar getting weaker? And fiat currencies on a global scale are getting far, far weaker, which leaves us with this illusion that we are in fact having huge appreciation. And by the way, JG, is that the actual real inflation, if you add tax, is like north of 15% last. So 100 grand translates to worth being 85 grand for rough math today. So that was just 1 year.
I was going to say that goes down pretty quickly. Add that up for 4 or 5 years, and your 100 grand is only worth about 50, like real quick, real quick.
So I can't stress enough is that having cash in the bank, well, some feel that, and you need liquidity. So I'm not debating that at all. I like liquidity, and I think it's, the thing to do right now is to be liquid so that you have capital available for a lot of the deals that will start to happen. But on the other side of that, there will be inflation in many segments, and technology being the deflationary. But when you look at hard assets, they will continue to inflate.
Now, Patrick, you and I talked about this, and that is this, and you mentioned it just a while ago, is this leads to a housing shortage. Is it in 2 years? Is it in 3 years? Is it in 5 years? We don't know, but the lack of building today leads to a shortage tomorrow unless we have a huge drop-off in population, and that's not necessarily expected to happen. Now, are we planning to import, have as many immigrants as we've had in the past? They say no. They say no. Whether or not they will, who knows? But the point is, Patrick, is the future right now is pointing to a housing shortage. And then everyone is going to yell from their rooftops, why didn't we see this coming? Why are the prices so high? Well, if you were watching this show, you knew what was coming.
It's the government's fault. Blame the government.
Blame the government. Patrick, I was just looking at my Bitcoin here. It's doing pretty good, eh? Yeah, it's doing great. Wow, fantastic. That's good. Okay, so housing shortage, definitely we expect that on the rise. If it changes, we'll let you know. But so far, that's where things are pointing. And Patrick, what do you got planned for the rest of the summer? Because I think that we're about to head into the lull of the summer. I don't think we're going to get a ton of headlines. We'll see what's going to happen there late July with the tariffs, Canada, Canada and the U.S. But other than that stuff, what do you got planned? What do you think investors should be doing in a summer like this?
Okay, well, July 18th, I'm in Calgary with Alfonso Quadra. We're actually doing a conference, multifamily, doing some education around multifamily investing, U.S. investing, raising capital, a whole 3-day conference that if you want to register for that, look at Wealth Genius or look at Rain Canada, and you can come to that event. Then early September, I'm doing another event, Recon, Real Estate Investment Conference in Edmonton. And there's something else I got, but I don't remember what it is. So there is some things going on. I'll be speaking at a few events and looking forward to that.
So are you suggesting people go watch you speak? Is that what you're suggesting? You're suggesting people invest in themselves and take in a course? Is that what you're suggesting?
Exactly. Come on out to the conference. They're got some great deals. Use the RAIN code. Go to raincanada.com. All that information is on the website.
What I will say, though, Patrick, is I 100% agree, is definitely it's always a good idea for people to invest in themselves and grow their knowledge. There's no doubt about that. And there's no better time to do that there right now. But if there's anyone that you've been wanting to do business with, if there's joint venture possibilities, I mean, right now, everyone is wide open. Like everybody wants to talk. Every realtor's open to a conversation. Mortgage, like everyone's open for business right now. And again, we have short memories as human beings. Like it wasn't like that just 18 months ago when everyone was so busy, nobody wanted to talk to you. Unless you had money in the bank and a deal to get done, they didn't want to talk to you. Now everyone's open for business. So now's the time to be, networking and growing relationships, Patrick, because those the seeds you plant today, you're going to reap those rewards tomorrow. So it's time to plant those seeds today.
So important not to fully check out of a market like this is to stay engaged, keep learning, keep listening, even if you're not ready yet because you think of whatever you think. Stay connected, stay dialed in. But something that's interesting, JG, is that, I talked to a very significant brokerage in Toronto, a friend of mine. He laid off 75% or let go 75% of his staff in his brokerage because that's how slow it is. And so that means that the realtors that are out there, you're really speaking to some very savvy realtors who've been in the industry a long time, because those are the only guys that are surviving, right? So there's some savvy realtors out there that are very experienced knowing how to get deals done in a market like this. And so you can really tap into some great all-star realtors who aren't so busy these days and are looking to do and get deals done. And something else we need to add to this is that, deals are getting done, offers are getting written, offers are being accepted, but they're hard to still get over that finish line because of some of the things that are happening in the background, financing being one of them. So all to say this, there is lots of deals to be had out there. There's a great future ahead. If you look into the future a few years, not a few months or a few weeks, there's some strong upside.
Yeah, great point, Patrick. And listen, they say diamonds are made through pressure, and these are those pressure times that people got to sharpen their swords and get out there and put in the efforts. You put in the reps on time with times like this, the good times, which are going to come, by the way, and it won't be very long. Patrick, I remember it was just a couple of years ago, we were saying, listen, this is coming, so just get ready for it. And here we are now. We're literally in it right now. We've been in it for some time. And now we're telling you, get ready, because the good times are coming. Like, they will come. Is it going to be this week, this month, this year? Maybe not, but they are coming. And we're going to be like, oh, I wish we would have done something back then in July of 2025. I wish we would have done something.
Yeah, it takes a little bit of courage, but if you're thoughtful,
it takes a lot of courage. It takes a lot of courage. It takes brass cojones to do deals right now, but you will be rewarded for it.
But I think there's another side to that, JG, which is that yes, it does. But if you really are looking at the deals, you've got time, you've got offers that you can write, so you can write some really creative offers, because sellers are open to creative buyers, that's for darn sure. And so there's lots of opportunity out there. We haven't talked much about Alberta. Alberta continues to do exceptionally well. Calgary is slowing down. Edmonton right now is still continuing to do what it's doing, but we know too that this shall pass. We've said before is that, when the market's booming, everybody thinks it's going to last forever. And when the market's shitty like it is now, everybody thinks it's going to last forever. You're both wrong. Both scenarios are wrong. Neither are going to last forever.
And it's, I really wish somebody a couple of years ago would have told these amazing viewers that Alberta was going to heat up. I wish there was a show that would have said that a couple of years ago. It would have been awesome. But I will say this, Patrick, I'm seeing more and more investors, and I'm getting the phone calls, and I'm getting more and more investors that are saying, you know what, I've done really well in Alberta. And they may not be cashing out, but they're now starting to buy in Ontario. They're bringing their capital back to Ontario. The deals are better. The cash flow is better. I'm seeing it. And, don't tell me in a couple of years. I wish somebody would have told me this. I'm telling you now. All right, Patrick, what a fantastic show. We covered it all. We covered the headlines. We covered the politicians. We covered the data. We covered the housing. We covered the good news. We covered the bad news. This was a great show. Thanks, buddy, and happy birthday.
Rein it in. If you enjoyed this episode and you want to hear more of what JG and I have got, check out our last episode. It was epic.